Welcome to Digital Investments. So today I'm going to, like I said in the previous video, I'll be uploading two videos today. So what all I already shared my analysis of Kotak Mahindra Bank and Dr. Reddy Laboratory, which I'm looking so forward to. But I'm also looking at uh, which is that Hindustan Unilever. So did you should you buy calls or invest in Hindustan Unilever ahead of its earnings call when they're reporting? So they're going to be reporting earnings about. One second, let me just open on 23rd of October. So that's going to be uh, 23rd of October. That's going to be on Thursday. So 24th is going to be Dr. Reddy's and 25th is going to be Hindustan Unilever, Kotak Mahindra Bank. So we had 3 days of good earnings call. So should you be investing ahead of its earning call? First of all, I want to say the Hindustan Unilever is a very good company to be investing in for the long term. As ITC, Hindustan Unilever, those are the two of the good spots you could buy for the long term. So, should you be investing in? Answer is let's wait till the earnings call, because I have some doubts. For trading, I wouldn't say, because keep your cash ready if you're trading in this Unilever. For investing, I would say keep your I would say investing. You could invest, but if you want to make money now, it's tech. I would suggest around this level you could start putting in your money. you know this is a price I would be looking at, so it has little upside potential here. Okay, so should you be ahead? What are the let's understand the macro. First let's understand the industry. What will kick in? First of all, GST reduction. There is will GST reduction be priced in this earnings call? And well second is another is tariff. Hindustan Unilever has partnership with various brand across the world. They taken the selling rights in India of other foreign brands. So let's look at Hindustan Unilever. First of all, I asked this question to Perplexity, and it gets it correct. You know, in the HUL reported that the recent GST reduction effective from September 22nd, 2025, lower GST rates from 12%, 18% to 5% or about 40% of its product portfolio. This product includes essential items like soap, shampoo, toothpaste, hair oils, talcum powder, lifestyle nutrition, and food products. Company has started passing these GST benefits to its customer to price reduction and value enhancement. However, rate cut based on short-term disruption in sale. There was a postponement. This focus on this part. Focus on this part. There was a postponement of new orders by distributors and retailers who need to clear old inventory at higher prices before restocking in the new prices. So when was GST kicked in? New GST reduction kicked in. Reduction in GST came into effect on September 22nd. So Q2 would have considered. Q2 would have considered it, right? So what about the old products? I don't know when he announced it. I don't remember. I think it was in Dasera. I forgot when he announced it. Up to August 15th, I'm guessing. Don't know when Mr. Prime Minister Modi has announced that, GST. So what about the old products, stock which they had to sell in higher prices? That would also be uh, uh, kicked in, right? and yeah, after that the products would have been kicked in. So uh, the so consumer also delayed pantry purchases in anticipation of lower prices. This result in a near to low fat consolidated business growth for quarter ending of September 30, 2025. Disruption was expected to continue into October due to high pipeline inventory reduction prices. So I ask, why is it not wise to buy calls before FY26 Q2? It's generally considered unwise to buy calls on HUL before the Q2 FY26 earnings before the quarter is expected to exhibit near growth due to short-term disruption in the GST rates and on key product categories. The GST cut lower tax rate from 12 to 18% to 5% around 40% of HUL portfolio, including essential, like which I just uh, repeated earlier, which caused delay in distributor and consumer purchase as market adjusted to new pricing. This could lead to sales disruption that is expected to into October. So I was right, there were products there were products before GST reduction. GST was kicked in on September 22nd. I may be correct. So what about the previous product? So that customer has to business has to clear that first before buying into the new thing. So old inventory maybe still not has been cleared. So and old inventory still hasn't been cleared yet. So and that's the reason. And the GST reduction has also caused a great may also have created a sorry, I'll repeat it again. What about the old products which are yet to be sold before GST reduction? That is still in the inventory side, right? That is still kept as inventory. They haven't sold it yet in the retail shop. And what about, so that's also a factor to be considered. And what about the new products with GST reduction which has been considered? That could also lead generate more sales, right? So that is where should you buy puts or calls. I'm doing, you can do whatever you want. This is my money, you do whatever with your money. I'm buying neither of them. For long term you can buy, but for me, I'm not buying anything right now for HUL. I'm waiting it for cash crash, then I may look into buying. For me great deal is ITC, that is more beneficial. But for me HUL, I am out for right now. I'm neither buying calls or not puts. I'm not buying calls because uh, I'm not buying calls uh, because GST reduction would have cost in more prices. Uh, GST reduction would have cost more sales. But what about the previous product? That enormous product they would have manufactured, right? Before the cut, GST rate cut. What about those products? They haven't touched it, right? Those products are still idle in their inventories. So what about that? And why am I not buying puts? Because why am I not buying puts? It could GST cut could also generate more sales also, right? So I'm in a dilemma. Should I buy calls or put? And when you're 50-50, it's best to stay outside of market. It's best to stay outside of market. So that's what I think. I'm not buying any puts or calls right now. For long term you can buy, but not right now. I would suggest let it crash around this level. I would be more interested here. There's a fair value gap at this site. So if it crash here, I would be interested in going long on it. But for now I am out. I am holding ITC. Sorry, yeah, much rather prefer buying ITC. it has got a better market share in FMCG factor. It has got a better balance sheet in FMCG factor. Although there a majority promoter are selling their stake, but I don't care about that. Company is growing good, and I see a good value in it for the long term. So I prefer buying ITC more than HUL, but you can do whatever you want. So uh, that's it for me. I'll just give a gist about why I'm not buying HUL ahead of its quarter, because previous products. What about the before the GST rate reduction on September 22nd? What about those inventory? Those are still at a new at the same prices, right? And what about they still have to clear that, and the inventory days of those products are just gonna be keep getting bet higher and higher. And I'm not one of my puts, because it could be that those product sales could have increased. So price and Indian customer gets crazy when there's price reduction or anything has been provided for the less value. So that could also generate more revenue, more profit, plus tariff. Also, you have to consider, tariff when you're considering the cost side of the analysis, because ITC has a partnership with many products outside over bought the India selling rights of its products from all over the world to India. That also you have to consider. So for right now, I'm out from HUL from out of HUL for trading purposes. So that's it from me. Please like the video and subscribe, and I'll see you in tomorrow's videos. Thank you.